Welcome back and thank you very much for staying with us. Well, Peter, yes, indeed, the South African Reserve Bank has decided to keep the repo rate unchanged at 6.75%. And Reserve Bank Governor Lesetja Kganyago announced the benchmark rate at a media briefing in Pretoria a short while ago. Take a look at this.
The MPC welcomes the continued downward trend in recent inflation outcomes and the moderation in inflation expectations. These are positive developments, as the committee would like to see inflation remain close to the midpoint of the inflation target range on a more sustained basis. The overall risks to the inflation outlook are assessed to be more or less evenly balanced. While there is scope for further moderation in meat and services prices, oil prices are expected to remain elevated and global food prices appear to have bottomed out. Electricity and water prices, amongst other administered prices, present additional upside risk. Against this backdrop, the MPC decided to keep the repurchase rate unchanged at 6.75% per year. 3 members preferred to keep rates on hold, and 2 members preferred a cut of 25 basis points. The committee assesses the stance of monetary policy to be broadly accommodative over the forecast period. Any future policy adjustments will continue to be data dependent.
For more analysis on the decision by the Reserve Bank, we are joined from our Durban Studios by Owen Nkomo, who is the economic analyst from Inkunzi Investments. Owen, thank you very much for coming to our program. Well, this decision was widely expected, although a temporary reprieve for the consumer. Is it going to be sustainable for a long run now?
Thank you for having me on the show today. I think that as long as the current environment prevails, we will see interest rates likely stay where they are for a protracted period of time. I think as long as the price of oil doesn't push up aggressively, we will see interest rates being retained, the repo rate at least being retained at 6.75 for a protracted period of time. The governor mentioned the food prices have started to stabilize. In fact, they've started to come off, and inflation itself, from the headline all the way down, has come off by a decent number, and I believe that that's important for interest rate forecasts going forward. We need to make sure that the inflation stays between the 3% band and the 6% upper band that the Reserve Bank wants to keep it at. And if that's the case, I do believe that we can rest easy when it comes to interest rates.
But then, one of the major concerns for the South African economy is its non-performance. And when we look at how the World Bank recently reduced its forecasts from 1.8 to 1.3, the MPC had expected, 1.7% GDP growth in 2019 with a downside risk. With that in concern, how then can one confidently stride in the non-performing economy, and are there really some risk factors that one should really be alarmingly concerned about?
Look, I mean, we've done a few business meetings today with people that finance some sectors across the country. They're telling us people are under a lot of pressure. They're starting to feel it. People's debit orders are bouncing. Big companies are starting to struggle in terms of consistently making payments for the loans that they took out a few years ago. And I think definitely the growth in the country, as projected by many financing institutions for South Africa, has been brought lower. Some guys have got it at 1%, some still have it at 1.3%. And I think that it's a matter of time before everyone sort of comes back to 1% as the potential 2019 growth target for South Africa's GDP. And you have to factor in the fact that the world also is starting to see a slowdown, and the South African economy is in a very complicated and difficult environment where people are still getting laid off, where companies are not in a position to expand productivity. And I think that this is partly why inflation is also coming down, because the demand side of things is not pushing inflation any higher. So definitely post the elections, I do hope that there's some fixes that the government can put into place that can get the economy kicking again. A lot of sectors are struggling. Construction is struggling, and to a certain extent, some of the services sectors in the country have held the economy up. But one hopes that a broader base of these sectors start at some point to tick higher than they are doing at the moment.
This development flies in the face of a consumer who should rather say, should I really care about interest rates not having changed? Because at the end of the day, even though inflation had peaked from 5.1% and having gone down with a decent number, like you have already alluded to, going from 4.5 to 4.4%. I mean, look at the oil prices, the food prices, and electricity prices as well. For a consumer who is having this situation being neither here nor there, they're still struggling and hard-pressed. What is the way forward for their finances? Is it going to be business as usual?
Look, it's already a difficult environment, as I've said earlier. Most of the funding institutions have got a lot of delinquencies in the loans that they've issued over the past few years. People are just not coping. People are not able to pay their installments on their car finances, on their house finances at the stage. Some credit cards are not being serviced, and big companies, as I've said, are also under a lot of pressure. So the man in the street is going to continue to struggle. The good thing, it is a good thing, I may say, that interest rates have been kept steady. Hopefully, down the line, there could be room created for interest rates to go down. That would maybe take money back to the pockets of people in the street out there. But obviously, that's going to be data dependent. That, just like the governor has said, if the data informs that interest rates must go down, I think that will happen. But at this stage, the guys have chosen to keep the interest rates steady, and it just means that you and me are better off in the sense that we're not paying more. Interest rates haven't gone up, even given the background of an oil price, which in the past month has actually pushed up all the way to $72 for one barrel. And the risk that still remains as well is the risk of energy prices going up. You know, Eskom is continuously looking to charge you and I more money than NERSA has actually allowed them. Should there be any changes to the tonality of NERSA and Eskom gets allowed to charge us more for electricity, I think you could see inflation start to go up. At least for now, because we've had some decent weather, food prices have been contained. And I think as long as people can afford to buy food affordably, the men in the street might not necessarily feel a deeper pinch than they could feel if food prices were going up and if transport prices were going up because of petrol price. All
right, just your parting shot, very briefly. There's an economist who said that there's a possible recession in 2019 going further into the fourth quarter. And secondly, the issue of stimulating the economy. On these two factors, what's your take?
No, look, all I can say is that the newly elected government and everyone who's just gone into parliament has got a lot of work to do. We need to stimulate the economy. We need to go out there and get money to get invested back in South Africa. We need to get back on that roadshow that President Ramaphosa started last year to get the bulk of that $100 billion to get invested in the South African economy. And I'm hoping there is a plan to say, how do we deploy this money so that we start to create jobs? How do we deploy the money to start to impact the unemployment numbers that we're struggling with, which currently sit at about 27.6%. So one does hope that the guys in Parliament go back to work, and I think a strong emphasis, as I've always said, is that needs to be in making sure that small enterprises get an opportunity to get a piece of the pie, because they are actually the companies that do create jobs out there. And once you start to see more people getting employed, then they have money to go and spend in the shops. They can go and take out loans and buy houses and hopefully buy some things that will help the economy get on a better footing. But again, let's remember that globally, the economy is not doing well. However, let's do whatever we can as South Africa to get the economy ticking.
Right. Coming to us live from our Durban Studios, Owen Nkomo is an economic analyst with Inkunzi Investments. And of course, we're going to take a break. When we return, the program continues with Peter. Stay with us.